Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host, Joel L. Condon, and I have David Tawil on the line. He is co-founder of Maglan Capital. David, how you doing this morning?
Good. Good morning, Joel. Happy holiday weekend to you.
Now, when I was looking at your profile, I noticed that you got your law degree from the esteemed University of Michigan Law School, and we're located here in Michigan. Do you ever come back to visit your alma mater?
I do. Love the Blue and Maize. It was a phenomenal experience. And in terms of my time there, I mean, clearly I learned a lot from a lot of smart people, and particularly, appropriate for this time that we're in, Judge Stephen Rhodes
Mm-hmm.
of the heralded Detroit bankruptcy case was my professor in law school.
Oh, really? When were you in Ann Arbor?
I graduated in 1999.
Okay. Do we have any chance tomorrow against Ohio State?
You never know. Those are very emotionally charged games, and you never know. Our guys can go ahead and rise to the occasion. We'll see.
Yeah,
Rooting for them, though.
I tell you, in all my years of watching Michigan football, I would say I'm running my mouth off the least going into this game, but we'll see what happens. We'll see what. Now I know you concentrate on distressed securities, bankrupt securities, all those kind of issues. Could you just and you mentioned Stephen Rhodes there. Could you just give us your take on the whole Detroit bankruptcy proceeding? How you expect Detroit to proceed here, and the implications you think it will have for other cities, municipalities, and maybe states?
Yeah, it'd be my pleasure, Joel. All very, very good questions. So let me start off with broad brush. I think it was a very successful reorganization of the city in terms of the parties all coming to pretty much consensual plan of reorganization in a pretty short period of time. It was the largest municipality to go bankrupt in this country in history. And it really showed the power of professionals, along with the judge, along with mediators, to go ahead and work together to reach a consensual plan. There were a lot of issues, legal issues, that were avoided in that consensual plan. They could have been litigated for a very long period of time, big issues about pension and then bondholders and priority and rights of each of those constituents. But those, again, were avoided through the consensual plan. It was a boon for the bankruptcy lawyers in terms of fees and to the investment bankers, no doubt. And now really is the hard part, which is, Detroit has been in decline from an economic and fiscal perspective for some period of time now. And now it needs to go ahead and really rehabilitate itself in order to be able to support its liabilities going forward. It's not as if they wiped everything out. They compromised a bunch of it. There were a bunch of haircuts that were taken, but there's still, very large pension obligations going forward that the city is going to have to go ahead and service. And that will have to come from some renewed business activity that's going to have to occur in the city of Detroit. And so here we are, cleaned off balance sheet somewhat. But going forward, there's going to need to be some renaissance in the business activity in Detroit.
Yeah, I was downtown yesterday at the Turkey Trot, me and 20,000 other people, and it was great to see. The city was filled. Buildings are being redone. Hotels are going up. They had the Thanksgiving parade afterwards, and then for once, Lions didn't disappoint people on Turkey Day, and you also have several big investors, local investors, doing what they can to reshape the city as a web hub instead of Woodward. Maybe Webward is the coin phrase Danny Gilbert likes to use. So there's a lot that has been done, but certainly a lot more work to be done. Any other municipalities you think or states? I mean, the state of Illinois. I mean, that's having its problems. I think it's one thing for a municipality to go bankrupt, but what about a state?
Right. So under the U.S. Bankruptcy Code, actually, a state cannot go bankrupt. That's not an option. They cannot file for Chapter 9, which is the reorganization chapter of the Bankruptcy Code. So they would have to default. Much messier, quite complicated in terms of how that all goes down. It's the same issue that Puerto Rico faces. But let me just double back to another question. I'll come back to this
Okay.
larger question. But let's talk about just some other cities and municipalities and what the ramifications are. I know a lot of people have been, speculating about the fact that Detroit clearly used Chapter 9 to its advantage, was able to use it in a pretty short period of time relatively in order to clean up a bunch of liabilities. I don't think that this is going to lead to a rash of bankruptcy filings, around the country by cities that could take advantage of Chapter 9. I think it's really a last resort to go ahead and file for Chapter 9. Unlike Chapter 11, frankly, that's used with on a pretty regular basis by corporations to clean up their balance sheets. I just think that the stigma that a municipality faces when it does file for Chapter 9 and the difficulty of digging out thereafter is really challenging. In addition, again, it's unclear still how well pension liabilities can go ahead and be cleaned up without some consensual agreement from the pensioners. In other words, if pensioners really wanted to go for broke and challenge the right of the municipality to go ahead and compromise those pension obligations, it's unclear legally. And each state has different provisions in its own state constitution that may go ahead and protect those pension obligations. So although we've had some rulings around the country in Detroit and in Stockton, California in particular, it's quite unclear, and it could become a very messy process. So for that reason, a bunch of uncertainty and then also messiness, I think that most municipalities, even if they could go ahead and take advantage of the Chapter 9 process, I think they will only go to it as a very last resort. So to get to your question now regarding Illinois, Puerto Rico, states, larger entities that don't easily fit within Chapter 9 are not legally part of that system, it becomes an even further difficult question. I don't know if you saw recently, Illinois tried to go ahead and pass a law to go ahead and compromise their pensions, right? Their pension liability is really what's weighing it down tremendously. And the law was struck down in Illinois. So clearly the state doesn't have the ability to go ahead and compromise pension obligations de facto. And it would have to go through a much more rigorous process, probably consensual, in order to get to that result.
David, this is Brianna. I know your fund focuses on event-driven and distressed situations. Is bankruptcy one of those events or distressed situations?
Yeah, of course. Sure. We're dealing with an environment right now that there's not a lot of bankruptcy going on because we have record low interest rates for a record long period of time. So we don't get that many bankrupt companies these days, but we definitely do get situations that are distressed for various reasons. And although they may not file for bankruptcy, their equities trade particularly low during that rehabilitation process. And that's where we've been focused recently on a lot of turnaround equity stories, so to say.
David, I saw you made some comments recently on sports betting. Could it be a boost to New Jersey? That was obviously voted down. You have just a really bad situation in Atlantic City. Are you combing through the debris in Atlantic City? And if so, is it something that may be a part of your portfolio?
It could be. We're still looking. We haven't purchased any Atlantic City debt. Like I said, the Chapter 9 process is pretty, challenging, and it is a last resort. And we'd like to go ahead and see some sort of sparkle of, life down in Atlantic City before we go ahead and charge in. There's really a lot in flux right now in terms of how many casinos are going to go ahead and shut. Carl Icahn, is rumored to try to go ahead and solve at least one of them, by throwing it a lifeline. And so obviously taxes are going to go down from employment. There's going to be a fair amount of property taxes that go unpaid. And so therefore, until there is some sort of remedy, even a small spark, in terms of what's going to go ahead and kind of lead to the transition from, gaming to something else, I think we're just going to be on a watch and wait mode for now, no matter how low those bond prices go.
Okay, and the sports betting was turned down. Any chance of that being revisited?
Oh, for sure. Right now, quite in the thick of things in terms of allowing sports betting in New Jersey. Chris Christie and his administration clearly wanted to go ahead and be revived. I guess the idea is that would go ahead and take the place of a lot of the gaming that has been lost to a bunch of neighboring states that have brand new and nicer casinos that have been drawing patrons. Even if they get through all the legality, and it is quite difficult, there is a federal ban on this, and the professional sports leagues, at least at this point, seem to be opposed to it. Although
Adam
I think
Silver,
at least one
Adam
at
Silver.
least one has spoken out in favor of it, right?
Yeah.
But I do think that there's going to be some resistance. But the more important point here is that if it's that easy for New Jersey to go ahead and gain revenue from sports gaming once it's green lighted, well, then every other state can easily do the same. So why would anybody think that the same way that New Jersey lost, gambling to neighboring states, they wouldn't just as easily lose sports gaming to other states? Even if they were the first ones to act, it would be pretty easy for other states to go ahead within their casinos and go ahead and set up sports gaming. So I don't think it's a panacea. We will have to wait and see. But definitely an interesting issue, and legally it'll carry out over the next bunch of months.
Okay, let's move on to a couple issues that we talked about last time you were on the show, and that's Fannie Mae and Freddie Mac. It's kind of been out of the spotlight as of late. The courts have not been real favorable to these two companies. Is this something you're still hanging in, or have you thrown in the towel?
We've actually gone ahead and cut the position to zero. We've sold all of our holdings there. There was a very sharp sell-off in early October in the securities. We were owners of the common stock, which didn't get as hurt as the preferred stock. We waited for a point where it had pretty much almost come back to the price before the judge's ruling. As you alluded to, the courts haven't been favorable. In fact, I'd go a little bit further and say the courts have actually been pretty against the shareholders in these companies. Judge Lambert, which is the judge who authored the opinion, threw out the suits in one of the cases that's going on surrounding the government-sponsored entities, Fannie Mae and Freddie Mac. And so therefore, the market read that very poorly in terms of the hopes that the shareholders, both preferred and common, could end up seeing some recovery. The market sold off very, very hard in both of those names and both of the issues. And we thought it was way overdone. We waited until there was a considerable amount of recovery, and then we went ahead and simply sold out of the position. And the real reasoning is this. I think on a legal basis, the shareholders still have the better argument. On a technical, legal basis, although from a policy perspective, the government did rescue these entities. They may deserve, on a policy basis, all the benefits that come from these entities on a going forward basis, all the profitability from these entities on a going forward basis. However, when they went ahead and took control or lent to these entities, the government did not go through the legal processes necessary in order to shift ownership to the government and away from the shareholders. And so therefore the shareholders, frankly, because the right processes and channels weren't utilized by the government in order to go ahead and take over these entities, the shareholders still deserve and own the rights to the profitability of these entities. At the end of the day, the judge, when the decision was rendered, made a very technical finding that to us wasn't particularly true to the law. And our concern is that it's much easier to affirm on appeal as opposed to reverse on appeal such a decision. The judge is a very well-respected judge from a very well-respected court. And so therefore, the likelihood of reversal is quite challenging. And it also, because of that decision, now sets a negative bar against the cases proceeding in other jurisdictions. And so therefore, we've gone ahead, we've moved on, leave it to those that are still hanging in to go ahead and fight the fight.
David, I'd love to get a couple comments from you on broader macro trends that are affecting specific sectors of the market. Things like government of Argentina refusing to obey U.S. court orders, the QE program in Japan, sluggish growth in Europe. So, any thoughts on any of those topics happening right now?
Sure. So let me talk about Argentina, Venezuela, oil. How's that for a good
Perfect.
topic to kind of tackle? So I think it's funny how things trade over a holiday weekend when the U.S. is closed and then marginally open on some days, and lots of people out of the office. I mean, clearly oil is a worldwide issue. Doesn't just affect our markets, but I'd say the majority of that trading happens in our markets, and so therefore, any movement is going to be overly pronounced when our markets are closed. I think oil has traded off an enormous amount. Not that it's not justified in terms of selling off, but I do think it's way over sold at this point. To go ahead and lose that much more value on the basis of an OPEC decision that people, I think, had a very good sense that it was going to go the way that it came out, I think, is a little bit much. In terms of how that affects, lots of countries that are teetering with oil as their main commodity, as their main export, as, a very large portion of their GDP, is very interesting. We'd lived in a world until about 3 months ago where there were a lot of economies around the world that were solvent and were able to, function on the world stage, not only domestically, because of their ability to go ahead and produce and then sell oil. That game clearly has changed. And I do think that there's going to be some very interesting dynamics that's going to occur over the next bunch of months. It may not happen immediately. We'll see a lot of sell-off in, say, high-yield oil debt. We've already seen a bunch of it. I think we'll continue to see a lot more. Over-levered oil, E&P companies are going to be, in a troubled state. I think, however, the more interesting longer-term trend is going to come from economies around the world that are not necessarily stable, but for their involvement in the oil market, and they will now be put under a lot of pressure. And we don't necessarily invest in sovereign debt. It's not something that we enjoy because we're bankruptcy guys, as Joel alluded to at the very beginning, and we spoke about a little bit. We're lawyers, and one of the good things about the U.S. legal system is that it functions fairly well, and you can predict a lot of outcomes pretty easily in terms of legal processes. There isn't a lot by way of precedence for a sovereign entity going into default. We're dealing right now with Argentina, which you alluded to. We're 13 years into that default, and there are holdout bondholders that have yet to be satisfied in that situation, and technical default persists. So I'm curious to see, how that begins to affect other sovereigns around the world that come under a crunch because of this oil pricing. And then secondly, what we will look for in the process of that is particular companies that have exposure to those countries that can go ahead and profit and are really getting overshadowed by the broader effect. So let me give you an example. We've been publicly, vocal on an investment of ours called Maglan Energy. It's a Canadian-based oil and gas company that has the overwhelming majority of its assets and production down in Argentina. So they sell into the Argentine government oil. The Argentine government sets the price of oil down there, so the worldwide price of oil doesn't really affect the company. The company pays its expenses in the peso. It gets paid for its oil in U.S. dollars, so it in fact doesn't get hurt by a currency change. And it seems clear that Argentina, along with YPF, which is the state-controlled oil and gas producer, is going to go ahead and cultivate as much as it can its shale potential down there. Because at this point, the country is a net importer of oil, and frankly, it has the capacity from a natural resource perspective to be a net exporter of oil. So it's a very interesting investment, and it's investments like that that we look for where there's tumult going on in the country, but there are particular businesses where we're comfortable with the infrastructure, where we're comfortable, with the solvency and the turnaround capability, that are able to go ahead and take advantage of those situations, but at the same time, in terms of pricing, they're probably getting the same type of treatment that's being applied to, the country or the sovereign itself.
Okay, David Tawil, co-founder of Maglan Capital, touching on a variety of issues here on Benzinga's Pre-Market Prep, brought to you by Market5. David, thanks a lot for coming on, and we certainly hope we can get you back again soon.
Always a pleasure, Joel. Have a great weekend.
Okay, go Blue.